Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about EVEREST Group LTD quarterly report. EVEREST Group Ltd. provides a wide range of insurance and reinsurance services globally. The company's offerings include property and casualty reinsurance treaty and facultative reinsurance products, specialty lines of business through reinsurance brokers, or directly with ceding companies, property and casualty insurance through direct sales, brokers, surplus lines, and general agents, reinsurance products for various industries such as plus mortgage plus catastrophe plus marine plus aviation, plus engineering plus professional line, plus credit and surety, plus motor plus agriculture/crop, plus political violence, commercial property and casualty insurance through wholesale and retail brokers, surplus lines brokers, and program administrators. The decline of EVEREST Group Ltd. Stock price. A year of challenges and strategic shifts. EVEREST Group Ltd.'s stock price has dropped by approximately 8.04% in the past year due to a combination of disappointing financial results, significant adverse reserve developments, and a major strategic repositioning of its business. The company's third quarter 2025 results fell short of expectations, with GAAP earnings per share, EPS, missing consensus estimates by $9.09 and revenue being flat year-over-year. The combined ratio worsened to 103%, indicating an underwriting loss. Additionally, the company faced substantial charges related to prior year loss reserves, totaling nearly $2 billion over the past year. To address these issues, EVEREST Group announced a strategic shift, including the sale of its retail commercial insurance business and a reinsurance agreement to mitigate future adverse reserve development risks. However, this move led to a revised outlook from credit rating agency AM Best, citing elevated uncertainty and heightened operational risk. Analysts also lowered their price targets for the stock, contributing to negative investor sentiment. The decline in net profit margin from 16.7% to 3.1% further challenged prior bullish profit narratives. These developments collectively contributed to the stock's overall decline over the past year, with a one-year total shareholder return reported at -8.35%. The primary drivers of revenue growth or decline can be identified through a review of key financial metrics. Revenue growth is primarily driven by an increase in premiums receivable, net investment income, and proceeds from the sale of fixed maturity securities. Specifically, premiums receivable increased by $639 million, net investment income rose by $44 million, and proceeds from sales of fixed maturity securities grew by $437 million. On the other hand, revenue decline is attributed to a decrease in premiums earned and gross written premiums. Premiums earned decreased by 1.6%, and gross written premiums declined by 1.1%. The reinsurance business also experienced a decline of 1.8% during the same period. These metrics indicate that changes in premium income and investment returns have significant impacts on revenue growth or decline. Net income for the company saw a significant increase in 2025, rising by 6.3% compared to the previous year. This growth can be attributed to various factors, with one notable reason being the impact of the Corporate Income Tax Act 2023 and related guidance on deferred tax assets. The act had a positive effect on net income. Profit margins, however, remained consistent at 98.8%, as stated in the report. Despite this stability, there was an increase in the combined ratio to 103.4% and the loss ratio component to 73.6%. These changes suggest that while the company's profit margins were stable, its operating efficiency and loss management may have been affected. The absence of a material impact from the One Big Beautiful Bill is also worth noting, indicating that this legislation did not significantly influence the company's financial performance in 2025. The company's financial performance indicates a strong ability to generate cash from its core operations. With net cash flows from operating activities totaling $3.5 billion over the first 9 months of 2025, it is clear that the business is producing positive operating cash flow. This trend suggests that the company has a solid foundation for long-term sustainability and growth. The company's financial summary reveals a notable increase in its debt level, from $42.466 million to $46.864 million. There is a 10.6% rise in total debt over an unspecified period. Furthermore, as of September 30, 2025, the debt level has surged to $1 billion. This significant escalation in debt suggests that the company's financial obligations have grown substantially. In contrast, interest expenses have shown mixed results. While accrued interest on debt and borrowings increased by a substantial 94% from $22 million to $43 million over an unspecified period, interest expenses for the 9 months ended September 30, 2025, were only $4 million higher than in 2024. Additionally, interest expense incurred for the 3 and 9 months ended September 30, 2025, actually decreased compared to the same periods in 2024. Overall, the company's debt level has increased significantly, while interest expenses have shown mixed results, indicating a complex financial situation that warrants closer examination. Management is optimistic about the company's future, citing continued growth in its insurance business and a commitment to delivering consistent value to stakeholders. The company aims to balance shareholder value with diversification and geographic expansion. It also emphasizes its financial strength, with significant flexibility and access to debt and equity markets. Management believes that existing reserves and reserving methodologies mitigate potential losses, and it expects annual positive cash flow from operations despite potential declines due to catastrophic events. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company has a history of paying dividends to its shareholders, as noted on page 59 of the report. Additionally, the company has also utilized its resources to repurchase shares from the market, further demonstrating its commitment to returning value to its investors. That concludes the financial summary for EVEREST Group Ltd. Feel free to comment below, and I will be happy to answer them when possible.